Welcome to BizFlow Tutorials video series on accounting integration for health and wellness providers. In this series, we will explore accounting integration within BizFlow. Beyond customer transactions, BizFlow allows you to record non-customer expenses like equipment and supplies. While not standard for all businesses, it offers flexibility in financial tracking. Essentially, any supplier-related purchase can be managed within BizFlow. BizFlow includes limited employee data but is not a payroll system. It features time clock functionality and tracks sales commissions but does not process payroll. For payroll, taxes, and salary disbursements, businesses must use services like ADP and integrate payroll data separately. BizFlow integrates with accounting platforms like QuickBooks, NetSuite, Sage, and Xero, ensuring accurate financial tracking. However, it is not an accounting platform. Businesses still need software like QuickBooks or NetSuite for balance sheets, income statements, and financial reporting. Accounting system integration. For tax compliance, BizFlow assists in integrating transactional data with accounting systems that handle quarterly sales tax reporting and annual business tax submissions. Businesses must ensure that their tax filings are completed within their designated accounting systems. As BizFlow does not provide direct tax reporting functionalities. Cash versus accrual accounting. BizFlow supports both cash and accrual accounting methods. During the initial setup, your assigned representative will inquire about your business's preferred accounting method, whether cash-based or accrual-based. We will explore the differences between these methods in greater detail, including how BizFlow manages them across different transaction categories such as services, products, memberships, and accounts receivable. Typically, businesses do not switch accounting methods mid-year. Any transition from cash to accrual or vice versa is generally implemented at the end of a fiscal year, before the beginning of the next accounting cycle. While most businesses operate on a January-December fiscal year, some may have different fiscal year structures. Therefore, any changes in accounting methodology should be made at the start of the designated fiscal year to ensure consistency in financial reporting. Switching between cash and accrual accounting significantly impacts financial reports as revenue recognition differs between the two methods. Consequently, financial statements will not match if businesses transition from one method to the other. System configuration in BizFlow. From the dashboard or main menu, navigate to Configuration, Policies. Within this section, locate the tab labeled Accounting Basis or Sales Revenue. Both refer to the same setting which determines how revenue is recognized within the system. When using the cash basis method, all transactions are recorded as revenue at the time of payment. Most businesses that adopt cash accounting apply this method consistently across all transactions. However, there are specific scenarios where a hybrid approach may be necessary. For businesses that operate on an accrual basis, transactions are recorded at the time of sale rather than when payment is received. To enable accrual-based accounting across all financial activities, simply select the accrual basis option within the system. Additionally, at the bottom of the settings panel, there is a checkbox labeled Allow AR for Cash Accounting. Selecting this option enables a hybrid approach, allowing businesses to incorporate elements of accounts receivable into a cash-based accounting system. Typically, only businesses operating on an accrual basis maintain an accounts receivable ledger. Cash basis accounting. Under the cash basis method, revenue is recognized only when payment is received, regardless of whether the sale involves a service, product, package, or membership. Payment methods do not affect this rule. For example, if a $100 transaction has a $50 upfront payment with the remainder due later, only the received $50 is recorded as revenue. Outstanding receivables are typically not allowed in cash basis accounting, but if enabled, they are categorized as accounts receivable until collected, a practice more common in accrual accounting. Businesses operating on a cash basis may allow corporate clients to pay later by issuing invoices, while accrual accounting records revenue upon invoicing. cash basis accounting does not recognize it until payment is received. In such cases, outstanding receivables appear in BizFlow but may not reflect in external accounting software like QuickBooks unless AR is enabled. Accrual basis accounting. In accrual accounting, revenue is recognized when an invoice is issued, regardless of payment timing. Partial payments are common, with outstanding amounts recorded as accounts receivable until paid. When payment is received, AR decreases while cash increases, and this process is managed within the accounting platform. Special considerations, liabilities and deferred revenue. BizFlow also manages liabilities such as gift cards. When a gift card is sold, it is recorded as a liability, not revenue. Revenue is only recognized when the gift card is redeemed. The portion of the gift card that has not yet been used remains a liability, requiring a gift card liability account within the chart of accounts in QuickBooks or another accounting platform. Memberships and packages. Certain accounting principles require revenue to be recognized over time, even in cash basis accounting. For example, annual memberships. If a customer pays for a one-year membership upfront in January, generally accepted accounting principles, GAAP, dictate that revenue should be spread across 12 months rather than recognized in full at the time of payment. BizFlow does not automatically distribute revenue over time. This must be managed manually within the accounting records. Packages. If a customer purchases a $1,000 package of 20 services to be used over the course of a year, GAAP requires revenue to be recognized each time a service is redeemed, rather than at the time of initial payment. BizFlow does not have built-in functionality to distribute package revenue over time. If needed, this must be manually managed within the accounting system. BizFlow manages both cash basis and accrual basis accounting. However, for memberships and packages, revenue distribution must be handled manually if compliance with GAAP is required. For further clarification or to explore specific functionalities within BizFlow, please reach out to our support team. Thank you for watching.